Great. Hello, welcome everyone to a special edition of Story Trading. We have Erez Raphael, the CEO of Dario Health, back here today. Before we turn it over to him, a quick disclaimer: Story Trading and myself, Ben Rabizadeh, we are not investment advisors. Investing in securities involves significant risk of loss. This event is being recorded and will be posted on our social media. First of all, a quick background. What is story trading? What is a story trade? And the idea of story trading is to understand market pricing, aka also known as the story behind the trade, through the lens of the four pillars: fundamentals, catalysts, sentiment, and technicals. And we're going to be we do that now on WhatsApp and on Zoom. We have our app coming out soon, and our app will be the place to discover, collaborate, and validate market moving information through crowdsourced research and social collaboration. You can sign up for our upcoming app release at StoryTrading.com. Now, Dario is, I own a significant position. I chose this as a VIP pick like last summer. I got in at $7 in a pretty big way. I think it was like $12 when I presented it. So you can go to StoryTrading.com, click on VIP picks. You can see all the stocks chosen by your community as VIP picks, and you can track the performance there. Here's a chart of Dario. So Erez, welcome back. You've been here many times. I always appreciate your time. We've also had Rick Anderson here. We've had your product team once, which is one of the best, most interesting presentations, by the way. We may want them back again in the future. But at this point, I'm going to stop my share. And Erez, I think maybe we can start off with just a quick update of anything new since we last talked to you.
Yeah, absolutely. So I think that what you have seen in the last few weeks is that we are starting to get to a rhythm of getting contracts signed. We have seen few of them, and we are talking for, I don't know, like 8-10 quarters about the transformation from direct to consumer into B2B. Investors wanted to see that we are winning accounts, and it seems, I mean, if you are looking on a typical health plan sales cycle is somewhere between 18 to, I don't know, 30 months. Employers is also 12 to 18 months, and providers is also 6 to 12 months. So a lot of things took time, and now it seems like we are starting to get into a rhythm of getting agreements done. We are announcing on them, and I think that we had almost every week something that was announced in the last few weeks, and I believe that it's going to accelerate because we are getting to some kind of maturity in this level of transformation. And I think that this is something that should build the confidence of the analysts that's surrounding us and the investors, that we can really bring this business into a hyper growth. That's where we think we should be. This is how we design the business. This is how we put the infrastructure, and we feel that we are getting there.
Great, thanks. The last time I talked to you, I think you had I know you don't give official guidance, but you were referencing the guidance given by analysts of 5 million or 5 to low 5s, and you expressed some confidence that you can come in the mid to high 5s. I wonder if you still have that confidence for this quarter.
Yeah. So now we are in Q3. I guess that you're asking me also about Q2. So I mean, we are in a kind of a period that before we are announcing, but I can say in general that we are confident that we are going the business the way that analysts envision it, and we are moving forward in the right direction. So the answer is yes.
Okay. All right, great. So I wanted to ask about health plans, because maybe I've misunderstood along the way, but I feel like it's behind schedule. And if that's the case, I just wanted to know if you can give us a little insight on why. Like, what are the inner workings like behind the scenes? What are some of the complexities or things that might hold up a payer deal from being announced?
Yeah. So let's go one step back before I'm going to answer this question. When you are looking out there into the market, solutions of digital therapeutics, and in a lot of cases, people like to to reference Levongo as a giant and some other companies, we need to remember that most of them were selling into the employers market, and this is how they grow the business and the revenue. And we already showed that we are winning employers. So I think that we checked the box on our ability to win RFI over the competition and implement successfully employers. This is something that we did. Now things should be reflected in the numbers that are growing. When it comes to insurers and health plans, this specific channel is not educated by the competition like the employers channel. To be more specific, I don't think that any one of the other digital therapeutics companies on the metabolic side managed to penetrate this channel. In other words, when we are looking into this specific channel of health plans, it's a bit unpredictable in terms of how quickly you can close the deal. And the process itself is a bit complicated and takes time. So the way to read this potential delay, and I agree with you, Ben, that there is some kind of a delay comparing to the original thoughts that we had. I wouldn't read this delay as something is wrong with the business or the value proposition, or we were kicked by one of the health plans that we wanted to close with. That's not the case. The case is that things are taking a bit more time because there is some kind of extra review, an extra process, and something is showing up in terms of some bureaucracy and stuff like that. So we are still very bullish about our ability to close health plans. We think that we can close more than few of them this year. We think that it should come sooner than later. So overall, we feel that we are in a good shape to get it done. We also feel that even though we see some kind of a delay on the overall picture in terms of growing our revenue and growing the business into the rest of 2021 and also 2022, we think that this potential delay is not something that will have huge impact on our ability to grow, and we can still be in a situation, and we're still in a situation that we can make the numbers. So that's how I would summarize this tiny delay that we feel that we have.
Okay, and is there any upside to the delay, maybe in implementation time? I don't know, once they kind of sign the dotted line, how quickly after that will you be recognizing revenue, do you think?
Yes, so I think that for the first few that we're going to sign, we're going to launch it relatively immediately. On the original contract that was supposed to be signed, we have dates that we already were supposed to launch it. So practically, even though the agreement is not signed, the process of implementation is something that we were promoting. The client felt very confident that the deal will be done. We felt very confident that it will be done. So both sides made a decision to put the resources in order to promote the implementation. So I think that in terms of the timing of recognizing revenue, the impact is going to be relatively low.
Great, that's good news. Let me move forward to the acquisitions. You've had two big ones recently. Well, first was Upright, and then Way Forward. Can you give an update on integration and how it's going versus your original expectations?
Yes, so I think that this is one of the places where we had a real strategy, and we knew from the first base, and again, it's going back like 10 quarters back. We keep repeating on the three main pillars. One of them is that we are looking to expand into multi-conditions. And I think that you interviewed me like after the acquisition of the Upright, and you asked about whether we're going to see another one. And I told you that yes, we might see another one, and we did like two in less than 4 months. And I think that this is a result of a lot of time that we were cooking on how we are moving forward and how we improve our value proposition. And we knew that the market is going want to embark on solutions that have more than 2 or 3 or 4 conditions, because the market will go into consolidation. Employers that are out there want to be in a situation, and also health plans, that they have one vendor that can manage for their multi-conditions. And it also makes sense from a patient standpoint to get better clinical outcomes if you know how to manage the user end-to-end multi-condition. So all this thesis was out there post the acquisition, when we were going to our clients and shared with them the integrated chronic condition management platform and division. We were very satisfied, and in some cases even surprised with how positive clients are looking into multi-condition platform and what advantages it's going to give us in the market. And I see today on our pipeline that more than 40% of our clients are exploring embarking on more than one condition. And I think this is a very good or very positive indication that we are heading into the right direction. And if you think about our financial profile, think about us as a membership company, okay? We need to get clients that will give us access to eligible population, and then every eligible member that embark on the platform, we are billing per engaged member per month. So all the financial profile of the company is improving, because the win rate per every client is getting higher because we have more than one condition. So clients have more than 2 or 3 reasons to say yes. Then on the eligible population, we believe that today on an average employer that embark on all the conditions, we have more than 40% of the population eligible to our products, which is much more than where we have been 2 years ago when we did only diabetes. And given the fact that a lot of the users are having comorbidities, the ARPU, the average revenue per user, is going higher, because if clients are buying more than 2 or 3 conditions, we can bill more every month. So think about the same investment into sales and marketing that can generate more dollars on higher margins. And I think that already in Q2 and moving forward into Q3 and 4, we're supposed to see a continuous improvement in our gross margins. That is also a result of this transformation into B2B2C, plus the multi-condition platform. So the financial profile of the company as a P&L is going to improve a lot in the next couple of years because of these acquisitions.
Yeah, got it. And I just want to drill down a little specifically again, in terms of the technical integration, the cultural integration, things, even like revenue that you expected to get. Is that any unexpected challenges there? Is it coming along better than you expected, as you expected, or worse than you expected? Because it's not easy to merge, especially two.
Yeah,
such a short time.
It's not easy, and you need to remember that we are not a holding company. We are a software technology company, and it's nice to make acquisitions, but it's very challenging to integrate everything into one platform, one experience to our client, one experience to our users. And that's something that we believe that we will know how to do. I mean, the original platform, the base platform, the metabolic, is designed as an open platform. So it's relatively easy to integrate other solutions. On the MSK, the Upright acquisition, we believe that toward the end of Q3, we should be able to have a full integration, one look and feel, different application, but one look and feel. So here we are making a progress according to what we anticipated from the first place. On the way forward acquisition, That's something that we believe will happen toward Q4. So overall, yes, we are doing it according to the plan, but still the timeline that I'm sharing with you now is super aggressive. It's very hard to integrate so many components together. There is operation integration, software integration, offering integration. On the pricing part, we did a lot of work on the last 2 months, and the pricing is, the integrated pricing is something that is already communicated with clients, and we get a lot of positive feedback. And I believe that one of the next contracts that we're going to sign will already carry the new pricing that gives us advantage on the multi-conditions. So we are moving very fast on that end.
Great, awesome. I want to shift to industry a little bit. You know, you did mention Levongo, and I think a lot of Dario investors were looking at Levongo in terms of valuation comparisons. A lot of people came to you because they were Levongo investors, but then it got swallowed up by Teladoc, and they're thinking, oh, Dario can be the next Levongo. So I'm just wondering your thoughts on, it seemed to be some disappointment in the integration of Levongo Teladoc, and Teladoc has been under pressure the last 6 months or so. How do you think that impacts your valuation, if at all, or do you have any thoughts on what's happened there between Levongo and Teladoc?
Yeah, so a few facts, and I think it's a public information. A lot of the executive teams and team members at Levongo are not anymore part of Teladoc. And I think that, you know, when you are building a startup that is creating something new in the market, it has its own energy when you are penetrating into the market. And in a lot of cases, you have a lot of capabilities that a bigger company wouldn't have. So if you take the fact that a lot of the founders are not there anymore, something is changing inside. Beyond that, I don't know exactly what's going inside the Teladoc organization. What I do know is that when we are going out there to sell into our clients, clients are becoming more and more sophisticated with regards to the solution that they want to embark on. That's number one. Number two, they're getting also sophisticated about how they want to be built for the specific software or service. And I think that when Levongo as pioneers implemented a very specific methodology on how they are billing their clients, who is considered a billable member, who is considered an active member, how you're going to bill for users that have one condition, and how you're going to bill for those that have two conditions. And I think that in some ways we have seen some, the market was a bit naive in the way that these kind of contracts were structured. I think that we are going into a place that the market is going to be more selective on how quality is the product that they are embarking on, what are the parameters in terms of engagement and retention rate, how users are being built. And I think that platforms that are more engaging and have a very good user experience, showing a more concrete clinical outcomes, much more transparent in the way that you're billing the clients per every users, I think that this kind of platforms will have a good chance to have a wider penetration into the market. And if Levongo will not adjust according to what's happening in the market, I think that other companies might take a bigger portion and expand the penetration. If we look on the overall market, just to remind you, Levongo had a few hundreds of thousands of users on the platform. And both Levongo or Omada or Dario are still less than 2% of the market. So it's still a huge market. The market is being less naive on the type of solutions that they are embarking on. The market is going intensively into per engaged member per month. And in some cases, we see the market also moving into value-based, which means that clients will pay in the future for solutions that are showing a concrete clinical outcomes. And I think that the Dario platform, the way that we built it and the way that we are positioning it, we can deal with this requirement in the market to be more aggressive. And I'm not talking about being aggressive on pricing and make things cheap. I'm talking about providing the best product with the best performance that brings the best value to our clients. And this is what they want to do. And if you show them that you have that, then they will pay, and we will get our margins. That's it's all about.
Okay, that's great. I only have a couple questions left. If anyone from the audience has a question, you can put it in chat, and we'll try to get to it. On the theme again of not necessarily specifically Teladoc, but competition right now. I saw there was some sort of big deal. It looked like a big deal between Microsoft and Teladoc. I hear people talk about CGM. Actually, one of the most common things I hear when I bring up Dario with my peers is, well, isn't like CGM the future, right? That's the awesome technology. That's the cool stuff. That's where everyone wants to go. And they don't have a CGM solution. So just wondering, more intermediate to longer term, how you feel about both like juggernauts like Teladoc partnering up with Microsoft and the CGM solutions out there. Tell us about that in terms of competition.
Yes, so let's talk about CGM and how this product is addressing the market. So for investors that used to deal with the diabetes market, the diabetes market for years over years was very focused on the intensive diabetic population, hence those that need to inject insulin. If you are looking on the 34 million people with diabetes in the United States, less than 2 million of them are having type 1 diabetic, which means that they need to inject insulin, and another few millions that are type 2 that are injecting insulin. So practically, if you are looking on the CGM total addressable market, it's those that are injecting insulin. So out of the 34 million, you have like few millions that will inject insulin. So practically, the CGM market is narrow in terms of the number of population comparing to the full population of 34 million people with diabetes. The Dario solution is not competing with the CGM solution, because eventually what Dario built is a software platform that help people with chronic conditions to change their behavior in a way that they can improve outcomes. So practically our addressable market is mainly the type 2 market. Yes, 10% of those that are on our platform are injecting insulin, but the other 90% have type 2 diabetes and they are not injecting insulin. On top of that, we have the population of hypertension and behavioral health, and we have the population of those that are under MSK. So I think that the CGM is a very specific for those that are injecting insulin, and the objective of the CGM is to help users understand exactly what is the blood sugar level every moment in the day, so they can know what is the exact dosage of insulin that they need. All the other things that we are doing is about managing the lives of someone with diabetes from a multiple aspect that related to nutrition, related to physical activity, and related to behavioral change. On a practical level, the platform, the software platform, is designed in a way that we can integrate other devices. So as you probably know, Dario is not integrated only with the Dario device. We have other devices of other manufacturers that are integrated into the platform. And I believe that in the future, we're going to integrate also CGMs into our platform. I cannot tell you that if a CGM will be integrated tomorrow morning, our revenue is going to grow drastically. I think that there are another 20 different growth drivers that we have that will bring us much more revenue than integrating a CGM. But at the same time, it is part of our roadmap because we believe that for this specific narrow segment of population that inject insulin multiple times a day, they need the CGM, and this is why at some point we're going to integrate it.
Okay, I believe I heard you in the past say that you're planning on integrating it by the end of 2021. Is that not as definitive at this point?
We have some plans for integrations. We're already having discussions. Just doing the integration, it's not complicated. The questions that we have is whether we can help one of the vendors that are having CGM complement them with our solution so they can sell a full change management solution into the specific segment, and this is what we are trying to do. Other companies that are doing what we are doing, that integrate with CGMs, didn't really drive a lot of revenue from this integration. So we are looking to do an integration plus some kind of a commercial deal, and that's what we are focusing on. So I cannot give you a definitive timeline on when it might happen, but it's on our roadmap.
Okay, great. I am done with my questions. You have any kind of final thoughts while we wait to see if anyone else has a question?
Yeah, just to give a high level overview, I think that the amount of transformation that the company had in the last 18 months was huge. I think that we're going to see it reflected in the revenue growth, and I think that we are going to grow intensively. And I also think that the next 18 months are going to be also super exciting. We did a lot of changes in a very short period of time, and we are full of energy to keep in the same pace and just to move forward very, very fast. I think that we are a very aggressive management team, and we have a very agile and very committed team. So I'm very proud in our team, and I truly believe that we're gonna bring value to our shareholders.
Sounds great. When is the next earnings report?
Mid-August, probably August 16.
Okay.
That's the plan.
Perfect. All right, Dario, Erez, wish you the best of success. We'll be tracking you. Just want to mention other events. You go to StoryTrading.com, click on VIP events, follow us on YouTube and Twitter. Erez, thank you very much. Hope to see you back soon, and good luck.
Thank you so much, Ben. Thanks,
Yep.
everyone.
All right, take care. Bye-bye.